And now to another CEO, this one bringing a big shakeup in the cannabis industry, as Canopy Growth co-CEO Bruce Linton, who also founded the company, is out. That sent shares higher by 2.5%. Aditi Roy has more about the move.
The news came shortly before the market opened, and it was big. Bruce Linton, the public face of the world's most valuable publicly traded cannabis company, was out. Shortly after Linton told CNBC, the move didn't come as a surprise and signaled that Constellation Brands, the beverage giant which owns more than a third of Canopy Growth and a majority of its board seats, wanted to move in a different direction.
At the end of the day, sometimes entrepreneurs are entrepreneurs because they're not super employable. And I would say I probably don't have a resume because I like creating businesses and driving them. And you don't always mesh well with everybody in the playpen. So I think probably what they're doing will actually be a better decision. It's just not a great day for Bruce.
Linton's co-CEO, Mark Zakulin, is now sole CEO of Canopy as the company searches for Linton's replacement. In a statement, Constellation Brands says the future of Canopy Growth remains bright, and we look forward to the company's continued success for many years to come. But Constellation CEO William Newlands was less sunny when he spoke about Canopy's disappointing fourth quarter results on Constellation's recent earnings call.
While we remain happy with our investment in the cannabis space and its long-term potential, we were not pleased with Canopy's recent reported year-end results. However, we continue to aggressively support Canopy on a more focused long-term strategy to win markets and form factors that matter while paving a clear path to profitability.
Linton helped broker the $4 billion deal with Canopy last year, a decision he does not regret.
When you bring in a big check and you change the board, unless you're like living in La La Land, there's always some perceived risk, but it would have been worse for the company if we didn't do that.
Under his watch, Canopy launched hemp operations in the U.S. and bought the rights to buy U.S.-based acreage holdings if the U.S. legalizes recreational marijuana. But those deals, along with supplying product for a nearly legal Canadian market and expanding internationally, has led to deepening operating losses and lower margins and missing analyst expectations on the bottom line last quarter. Meantime, industry watchers like Cowen said in a note it does not believe the shakeup will be disruptive and views it as a positive for both Canopy Growth and Constellation Brands. Canopy's second largest shareholder after Constellation, Murray Goldman, tells me he believes the company will stop making acquisitions and focus instead on financial discipline and increasing productivity and sales. For Nightly Business Report, I'm Aditi Roy, San Francisco.